Malaysia's prospects come 2050 aren't looking too good, according to DM Analytics Malaysia. In fact, we're apparently in serious trouble. Its chief economist Muhammad Abdul Khalid says this is because we could be looking at a population that is old, poor, sick and without children. He cites a projection by UNICEF Malaysia's Amjad Rabi that shows that Malaysia will have an ageing population by 2035, with more than 15% of the population aged 65 and above, compared with 8% now. And the fact that we will take 25 years from 2010 to 2035 to become an ageing society is mind-boggling, considering it took France 115 years and the Philippines 35 years to reach this stage. Meanwhile, about 70% of Malaysians who are about to withdraw their money from the EPF have less than 50,000 ringgit in their accounts. Obesity and smoking are also big issues in Malaysia, while Amjad's data show that the fertility rate has declined from 6.2 children per woman during independence to 1.9 child per woman today. Not helping matters, younger Malaysians are facing unemployment and stagnant income growth. Muhammad says it is high time Malaysia changes the entire structure of its economy and ideology. Right now, he says the focus on being high income and among the top 20 nations by 2050 is pointless, as it is not inclusive and only benefits select groups. The migrant population has surpassed the size of the Malaysian Indian community and will exceed the local Chinese population in 17 years' time. According to Chua Chun Hua, the Under-Secretary of the Women, Family and Community Development Ministry, this is because of our dependency on foreign labour. He says if we look at the data from the Department of Stats and National Labour Survey 2014, the migrant population has already surpassed the Indian population in 2016 by 3.1 million to 2.1 million. And by 2034, the number of migrants would have overtaken the Chinese by 7.5 million to 7.4 million. This projection by Chua means that by 2040, migrants will make up 24.2% of Malaysia's population. Of course, migration is a two-way street, and having a growing migrant population isn't unique to Malaysia. Based on Priceonomics 2015 data, the top three nations with the largest migrant numbers are Saudi Arabia at 32.3%, Australia 28.2% and Canada 21.8%. Allianz Malaysia has ended its courtship of HSBC Amanah Takaful Malaysia. The insurer had been looking to acquire 100% of the Takaful operator since last October. It had been negotiating with HSBC Amanah's shareholders, namely HSBC Insurance Asia Pacific, JAB Capital and the EPF board. But Allianz Malaysia has now called off the talks, though it didn't say why the negotiations fell through. The transaction would have been worth between 240 million and 300 million ringgit. Allianz Malaysia's shares closed 2 cent or 0.17% higher at 11 ringgit 50 cent today for a market cap of 2 billion ringgit. An opposition lawmaker is reportedly asking the government to declassify the 1MDB audit report and make it public, now that the state fund has reached a settlement with Saudi's IPIC. Past Deputy President Tuan Ibrahim Tuan Man is concerned as the deal doesn't seem to benefit 1MDB, as IPIC got exactly what it wanted. To recap, 1MDB will repay IPIC some $1.2 billion by year-end as part of a settlement of a $6.5 billion dispute. According to the filing, 1MDB and MOF Inc. will also assume responsibility of future interest and principal payments of $3.5 billion worth of bonds issued by the state fund. The bonds were previously guaranteed by IPIC, which means the Saudi fund is now freed of its co-guarantor obligations. The dispute centres on a 2015 bailout deal, which saw IPIC lending $1 billion to 1MDB and assuming interest obligations on the $3.5 billion of debt. In return, the Malaysia Fund was supposed to transfer some assets to IPIC's subsidiary Aba Investments, only it went to the wrong Aba Investments, which was registered in the British Virgin Islands. Nestle Malaysia saw its first quarter net profit increase by 4.4% as the company's firm hand on costs negated the impact of higher commodity prices and the weaker ringgit. Net profit came in at 230.4 million compared with 220.7 million from a year ago. While revenue likewise rose up 4.6% to 1.37 billion compared with 1.31 billion last year, driven by higher contributions from both domestic and export sales. Nestle's product line had also expanded during the first quarter to include Nescafe Gold Creamy Latte and Dark Latte Coffee, Maggi Hot Meals and Kit Kat Mini Chocolate Waffle, among others. Its CEO Alois Hofbauer says its decision to invest upfront in marketing and trade promotions during the last quarter of 2016 has clearly paid off. For the coming months, Nestle says it will continue to implement its Fuel the Growth strategy, which focuses on supply chain efficiency and intensified trade and consumer promotions. Strategies that Hofbauer says should help Nestle to weather headwinds of higher costs and softer consumer confidence.